Imagine a world where millions of people, once shut out of the banking system, can now send money home to loved ones, save for the future, and even borrow funds to start a small business, all through their smartphones. That's the transformative power of fintech unfolding right before our eyes. But here's the twist. Is this digital revolution truly lifting everyone up, or could it be leaving some behind in ways we haven't fully grasped yet? Press release. IMF unveils insights from the 2025 Financial Access Survey. October 29, 2025. Washington, D.C. In a move to shed light on the evolving landscape of global finance, the International Monetary Fund, IMF, has just published the findings from its 2025 Financial Access Survey, FAS. You can dive into the raw data at https://data.imf.org/datasets/datasets/imf.sta:/FARS. And for deeper analysis, check out the accompanying report titled A Financial Access Survey, Fintech, a Catalyst for Financial Services Access, Innovation, and Growth, available at https://data.imf.org/media/storage/documents/7FC05 for 52C6C7 for 3D2BFB61882E248A384-EN//2025-FARS-annual-report.pdf. This comprehensive document explores how fintech innovations are fundamentally changing the way we think about finance worldwide, boosting access to financial services, fostering innovation, and fueling economic growth. These elements are vital not just for prosperity but also for maintaining financial stability and achieving sustainable development goals that benefit all of us. Launched back in 2009, the FAS remains the go-to annual resource for supply-side data on financial access and usage, offering policymakers the evidence they need to craft effective strategies. This year, an impressive 163 economies contributed data, a bump from 158 in 2024, covering 121 different data series that stretch back to 2004. And as finance keeps innovating, so does the survey, now incorporating fresh details on digital financial services, fintech-based lending, and data broken down by gender to paint a fuller picture. Digital financial services surge ahead. One of the standout trends in the report is the explosive rise of digital transactions, encompassing everything from mobile money platforms to mobile and internet banking. In emerging and developing economies, the number of these transactions per adult has skyrocketed from 55 in 2017 to a whopping 251 by 2024, as shown in Figure 1. This isn't just numbers on a chart, it's real change happening on the ground. Take Sub-Saharan Africa, for instance, where mobile money has revolutionized access for millions who were previously unbanked, no need for a traditional bank account. These accounts are growing at a faster clip than old-school deposit accounts in the region, see Figure 2, and in several countries, they've even overtaken conventional banking. For rural families, this means safer ways to stash savings, send money to relatives, or settle bills. And when it comes to remittances, those crucial funds migrants send back home, digital methods have made a huge leap, climbing from 13% of flows in 2019 to 46% by 2024. This shift cuts down on costs for everyone involved, making it easier for people to support their families across borders. Fintech lending revolutionizes credit for the overlooked. But here's where it gets controversial. Fintech isn't just about payments, it's also shaking up how we access credit. The report dives into how fintech lending is remaking credit markets across the globe. Drawing from industry sources like Statista, it notes that buy now pay later, BNPL, services hit a massive $350 billion in transaction value last year, while peer-to-peer and marketplace lending handled $62 billion worth of deals. The real game changer is the impact on underserved groups. Referencing data from CGAP, the report points out that in sub-Saharan Africa, Fintech funding for micro and small enterprises jumped from 13% to 88% of total fintech investments between 2020 and 2023. In other emerging markets, fintech lenders are stepping in to serve everyday consumers who traditional banks often ignored, with a big focus on young people and those in rural areas. Even in some wealthy nations, fintech firms are outpacing traditional banks when it comes to issuing unsecured personal loans. This expansion raises eyebrows. Is fintech democratizing finance, or is it creating new inequalities by favoring those with digital savvy? Figure: adoption of digital financial services. Sources: Financial Access Survey, UN, OECD, World Bank's Global Findex, and IMF staff calculations. Notes: regional weighted averages are based only on economies with data for the periods in question. Mobile money acts as a digital form of currency and savings, managed through accounts and a network of agents, and doesn't require a bank account. Mobile and internet banking involve using apps on phones or other devices to handle banking tasks. Bridging literacy gaps and navigating new risks. Of course, with great innovation comes great challenges, and this is the part most people miss. Despite all the progress, the FAS data uncovers a clear link between literacy levels and how well people adopt digital financial services, as illustrated in Figure 3. Nations with stronger financial and digital literacy tend to see higher usage rates, underscoring how knowledge barriers in others can hinder safe adoption. Low literacy, coupled with spotty infrastructure, steep fees, and confusing rules, ramps up risks like getting into too much debt, falling for predatory loans, becoming victims of scams, or having identities stolen. Gender gaps are still glaring. Women's deposit balances stand at just 64% of men's, and their loan amounts are even lower at 46% globally. Tools like BNPL can hide the real cost of borrowing since they're unsecured and often not tracked in credit records. Without better financial education, straightforward regulations, and top-notch cybersecurity, these pitfalls could erode fintech's promise. And this sparks debate. Should governments prioritize education to close these gaps, or is it up to individuals to catch up in a fast-evolving world? FAS efforts tackle key fintech data shortcomings. To plug holes in our understanding of this dynamic sector, the FAS team ran pilot programs in 2024 and 2025, experimenting with over 100 new metrics related to e-money, e-wallets, mobile money loans and deposits, peer-to-peer lending, equity crowdfunding, and neobanks. Countries like Brazil, Colombia, Honduras, Kosovo, and Saudi Arabia played key roles in these trials, helping set new benchmarks for gathering fintech data. Some of these indicators will soon become standard in FAS reports, giving policymakers sharper tools to track and promote fintech for broader financial inclusion. This work aligns with the G20's Data Gaps Initiative 3 Recommendation 12 on fintech and inclusion, representing a big stride toward unlocking digital finance's potential for growth that works for everyone. IMF Communications Department. Media Relations. Press Officer, Pember Sherper. Phone, +1 2026 23710. Email, media@imf.org. At IMF spokesperson, https://twitter.com/IMF spokesperson. What do you think? Does fintech's rapid growth outweigh its risks, or are we overlooking hidden downsides in our rush to embrace it? Do you believe literacy education should be mandatory for digital finance users? Share your views in the comments. I'd love to hear agreements, disagreements, or fresh perspectives.